The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Today's guest and their company are not affiliated with or endorsed by LPL Financial.
Well, thanks for doing this. All right, so first diving in, can you tell me a little bit about what you do, what brought you into it?
So I'm a mortgage broker. Difference between like maybe your local bank and a broker is that I have access to multiple different lenders. So I'm a personal shopper basically for my clients.
Okay.
Mm-hmm.
So what got you into that?
Well, I was a stay-at-home mom for 10 years. And I knew I wanted to get back into a career, wasn't sure what. All of my family were into the medical field of some kind, nursing, respiratory, radiology, something. And I knew I didn't want to do that. That's not what I felt my calling was. So looked at real estate, did get my realtor's license. But then I had a friend that said, hey, I really think you would like the mortgage side better. Just try it. I thought, why not, right? If I don't like it, I'll just go back to real estate and I'll be a better agent, knowing both sides a little bit better. But then I fell in love with it. So here I am 11 years later.
Oh.
I haven't looked back. Yeah.
Okay. Where did you start in the mortgage broker? Like, did you start for yourself at that point? Were you from a larger group and kind of branched off? That kind of deal.
So I stepped in as a loan officer assistant, and depending on, I guess, how you're wanting to start your career, I always feel like that's a good starting place to start, because you get to know the programs and the details and the back end as well as just the sales piece of it. So you have a better knowledge of how the process works versus just trying to step in and be a loan officer looking to sell the product. You just have a better grasp of the overall, what you're offering in each product that's going on. But that's why I recommend either loan officer, assistant, or a processor. And then from there, the group did move a couple times into different mortgage companies, and I went with them. And then once they made one more move, I branched off as a loan officer to another company by myself.
And what is the name of your company?
Right now, I opened up my own branch. It's Impact Financial.
Okay, perfect. Yeah, as I meet more people, as I talk to more people, I kind of find myself interviewing people who are kind of in that endpoint job. Hey, I'm doing this. This is what effect I have. This is what's great about it. This is what I'm enjoying about it. But there's very little in the way of how does someone actually get started. And there's so many people who are kind of like on the earlier side of that journey. They're looking to get out of high school. They're looking to get out of college. Or they've been in a career that they just haven't really enjoyed that much. And they want to have a path better. And so that's one thing that I'm kind of definitely curious about. So what are you enjoying right now as you're helping your clients? What's the part that brings you back saying, I'm glad that I'm doing this. This is a really great effect that I have on their lives. What is that for you?
For me personally, I love to see when I have a client that's been told no multiple times. Not that I want to see them being told no, but I like to give that encouragement back. And that's what I enjoy working with my clients is the plan that I give them, that they walk away no matter if the answer is here's how we can move forward right now, or it's a no, but we can't right now, but we can later. And this is the plan we're going to work on. And I love that piece of it. I never send them off discouraged. I want to see people that are empowered, because this is a very intimidating topic and sometimes move for people because it's a big purchase. And I hear all the time, well, what if my credit's not good enough? Or what if I don't make enough income? Or what if I don't have the down payment? Well, you'll never know until you have that conversation. And there's always a plan that we can put together for you. And I love that piece of it, to see what that does for people. Because home ownership changes people's lives, how they feel about themselves, and then that just changes your generation and children and going on.
Yeah. Do you see yourself as a bit of a resource then in that way of just helping people decide, hey, you are ready? Hey, this would make a little bit more sense for you. How do you view yourself on that as far as I'm selling a product, I'm trying to make a profit, I'm trying to do this business for the sake of business,
Mm-hmm.
versus I'm a resource for additional information, developing relationships, and actually trying to work with the client's best interest?
Yes, always a resource first, because people are our greatest assets, right? You have those relationships, that network. If you treat somebody good, it's always going to be come back to you in a positive way, and that doesn't always mean financially. Great when it is, but if all you're focused on is financial, then I challenge that you're not really going to have a happy life if that's the only focus is the one thing is financial.
Absolutely. Any stories, client experiences that you might want to share, just kind of how you've been able to help them?
Yeah, I have one recently. It's a veteran. He had really high debt to income ratios. Now, fun fact, VA doesn't look at debt to income ratios, but they do look at your residual income.
Okay.
And if you're a manual underwrite or approval in the system, there's some additional steps for that.
Okay.
So the tricky part is finding a lender that will allow for a higher debt to income ratio.
Okay.
Go by VA rules, guidelines completely and truly, right? Because it is, if they're the lender giving you money, you can understand where they still would have a comfort level of what their max would be.
Sure.
So you can understand that. But they've been told no by another lender. They were getting kicked out of their rental. So it was, we have to find, one of those situations, we have to find a house like now for our children. They're in more of a rural area, so they wanted to stay there. Choices are limited.
Sure.
Well, we were able to find that lender that would take their debt to income ratios higher. They have their approval. Initially, we thought maybe they'd have to pay off some debts, but they don't now. So the fact that they were willing to trust me and walk through that with me, and I told them, look, we're going to gather all the information and turn it into the underwriter and give our story and why we feel like you're good.
Yeah.
You fit the guidelines. And knowing now that, we're a week out of closing, that's what I love.
Yeah.
Mm-hmm.
It's amazing. For people not understanding the difference kind of in that story of how would that same story played out if you were just a traditional bank?
Mm-hmm.
Things that you've kind of seen in the industry, what would have been different about the experiences, the services that you would have been able to provide versus what you have to offer now?
Yes, that's a great question. So a lot of times you will see banks or residential mortgage companies, they'll take guidelines. So FHA, Fannie Mae, Freddie Mac, VA, they give us their guidelines.
Okay.
And they take the guidelines and they put their own rules on top of that, and they call them overlays.
Okay.
So many times you'll see overlays if one company will require a credit score of a 640, but another company says, no, we can go to a 580. That's why. It's because they've taken guidelines and put their own overlays on it. So a lot of times that's where it gets tricky for maybe somebody that's struggling with credit and their credit scores are maybe a little bit lower than 600. You might have a harder time with the bank because they're going to have typically, we're just generally have a higher credit score requirement,
Sure.
a lower debt to income requirement, and many times you won't see options for a grant program or down payment assistance with some of the banks or a residential lender. Whereas when you're working with a broker and you have multiple lenders to choose from, you can find the perfect fit where you can look at a couple lenders that will allow maybe for the lower credit score or a higher debt to income ratio. Or you have grant options. We have multiple grant options too. So that's why I like the broker side of it, because I can shop around and see what is the best fit for this client.
Right.
Mm-hmm.
Yeah, I kind of think of the experience that I think was a little bit more prevalent in the past, which is kind of you had the relationship with your bank, with your whatever your institution is.
Mm-hmm.
You go to them because for pretty much everything that you do.
Mm-hmm.
And then if you kind of get rebuffed or bounced back, you're not really walking into anyone else's door. I think that the nature of finance in general right now is a little bit more on the consumer side, where they're able to use the internet. They don't have to physically walk into a place. They don't have to put themselves out there in a really vulnerable state, especially as you're kind of talking about debt. You're talking about a lot of those topics that make people very uncomfortable.
Yeah.
And also ones where they feel vulnerable. They feel like whenever they sit down across the table that they're kind of getting analyzed. They're getting certainly judged based upon a credit number, things like that. Where it kind of sounds like services like yours, and yours specifically in this case, really kind of help with that a little bit more so. Maybe you're able to, as much as you can, appeal to the human side rather than the hard number side or the overlay side that I guess you're saying. Would you say that's accurate?
Yes.
Okay.
Yep.
Perfect.
And I think that's also each loan officer.
Okay.
What also you want to focus on. Because I hate when it hurts me to hear when people come up, they start defending almost right away things that have happened or they think I'm going to prejudge on.
Yeah.
And I tell them all the time, look, life happens.
Yeah.
Things always come up. Sometimes it is completely out of your control. And I'm definitely not going to sit here and judge that. I'm just going to help you. Hey, I see this is what happened. But how can we work to get you to the next level that you want to be at? Right. It's definitely not me coming in and judging, for sure. Yeah.
I've definitely had that experience where we're in the meeting and a good first portion of that meeting is, so this is what happened to me in the past.
Right.
Hey, this is where this journey started. Hey, this is the first kind of roadblock I ran into, and it was 10 years ago. It was 5 years ago. It was definitely in the past, and something that they're doing their best now, but they still feel like they're either, one, held back by the consequences from that. They have to answer to them that, I don't know, that I'm going to somehow do anything different based upon that information. But it's certainly a part of their personal life that maybe they don't feel comfortable really talking about, and it really keeps them away from people who are really going to be able to help them.
Yeah.
So, yeah.
Yes.
Okay. So, kind of going on a little bit of kind of nuts and bolts on mortgages, just of obviously interest rates, them being high right now is somehow a little bit beneficial where everyone is kind of laser focused and learning a lot about the effect of an interest rate on their mortgage. How would you describe the effect of an interest rate right now? What it looked like maybe a couple of years ago, and just kind of as you're dealing with buyers who are looking to get to the market, maybe in the next year, 2, 3 years, what are you telling them as far as interest rates go?
So
that was a lot to that.
No, yeah.
So yeah, you feel free to break that down. So what is an interest rate? How much can a 1 or 2% swing change your life, basically? And what are you telling kind of buyers, or how do you couch that conversation?
Interest rate. So that is the rate that you're paying the interest on the note that you've pulled out for your home, whatever the balance is once you've gone to closing and you've signed on the dot. Rate changes your payment significantly, especially if you're looking at a higher loan amount versus a lower loan amount. But I also I always encourage people don't get stuck on the rate. And I know that that's the first thing people ask for.
Okay.
But so we're going back a couple of years, right? We were in the high 7s, even 8s at some, depending on what you're looking at to buy, program, whatnot. Right. And why I feel like a lot of people held back, right? Would not buy because the interest rate was at an 8%. Well, if you then look at over 2 years, if you just went ahead and bought, you're at your 8%. Now, 2 years later, you could have refinanced into a lower rate, but also you're missing the years that that home has appreciated if you didn't buy. Okay. So you're still it's still a good purchase. Real estate, in my opinion, is always going to be a good purchase. And you can look at the numbers over the years, it appreciates. Your home does. So you have that value growing for you, even if you bought in at a higher rate. Now, rate higher, lower, it's really relative to what you feel like is too high. So I have people that will tell me, oh, a 6, 7, that's great. Because to them, when they started buying or looking, it was You know,
Should
we were in
definitely
the
have that.
higher 8s, maybe even, you know, just depending on what you're looking at. So for them, it's dropped down to, and 6 is great. Now, if you were purchasing when it was 2 and 3,
Sure.
yeah,
That sounds like
6% is pretty rough, right?
Yeah.
So that's why I tell people don't get stuck on the rate, because it changes, and you're still going to have the investment of your home that's going to grow over time. That's still going to be, you know, the better option than renting and paying for somebody else's
Sure.
home to appreciate, and you're paying down the mortgage.
Right.
You had another.
When do you typically think that financing would make sense?
Yep, that is a trickier one, because I do want to look at the overall picture. I don't tell everybody just, you know, just refinance just because it's a lower rate.
Right.
But if they have a really low mortgage, and let's say we throw some extra money towards your principal every month and get it paid off quicker than spending the money to refinance. It really depends on their personal situation.
Right.
So yes, look, just when you go to sit down with your loan officer, make sure you're getting all the information.
Okay.
Several options. Do you want to cash out to pay off debts? Does that make sense for you? So even though maybe you're taking now a higher payment, possibly, and obviously a higher loan amount to pay off your debts, but how much of that income now is it opening up? Can you get that debt paid off quicker than refinancing? So there's several things. You really need to take it a good overall picture. And I think that's where having a team too, your financial advisor, your mortgage lender, where they can even say, okay, this is what we see could be a good benefit for you. Look at the overall numbers. Mm-hmm.
Yeah, I think a lot of that's tied up with what a loan officer can give you advice on. I mean, very much there are a lot of regulations around that. And where it's not necessarily, hey, I can't say anything because it's not in the bank's best interest or anything like that. It's literally just they're not licensed to give advice like that. To be able to say, hey, guess what? You definitely should not do this because this would be so much worse for you, versus you should definitely do this because this would be so much better for you. They really can't give advice on either of those things, most cases, from what I believe. So like you can't really guarantee, of course, anything with the industry, but when it comes to the financial aspect of it, there's so much of who can provide information, who can, what they're allowed to say within those meetings, what they're allowed to kind of make recommendations for. So I would say that you do run into a little bit of that if you lean too heavily on that loan officer versus maybe someone else who's in a different profession, someone else who's able to kind of run the numbers with you, that might change things a little bit. Whenever I look at whole picture on that, it's definitely, how do I find out what the cost of a refinance? It's not, I don't know, people throw around refinance a lot like it's free.
Right.
Like you get to just like kind of like a stamp of approval. Hey, I'm refinancing. I now pay you less for absolutely
They get stuck
nothing on my part. Yeah.
Rate and payment, right? They don't look at the overall.
So how do you find out what the cost of a refinance would be? Is it always you have to run those person's specific note and kind of those numbers, or is there kind of a general rule of thumb?
Well, yeah, it does depend on your state and where you are. Yeah. But for us, we're looking at probably anywhere from $4,000 to $5,000. Now, keep in mind, it does depend on your escrow account. Do you have an escrow account? Are you resetting up that escrow account? That can change, because if you're looking at going to closing with the zero out of pocket, yes, typically you'll have that escrow account come to you, but that could change how much you're borrowing because of your loan amount. Okay. So it might be better to go ahead and pay for that closing cost up front instead of rolling it into your loan. Okay. So there's different things to look at, and it really is not one fits all. Okay. Yeah, got that. Okay. But $4,000 to $5,000, that's, you don't want to keep refinancing over and over again.
No, absolutely, it would make sense.
Right.
And there's also typically running the numbers about what makes sense as far as, oh, it's come down 0.5%. Okay, yeah. How much is this really helping me?
Right.
For how much I'm going to put into the cost of this refinance versus someone who it drops 2 or 3%. That's a very different conversation. That's a very different calculation for, hey, you know what? I am going to spend an extra $4,000 to $5,000 that's out of my pocket right now. but I'm going to save 3 or 4 a year looks a lot different than, hey, I'm going to save maybe $500 a year.
Yes,
So, yeah.
exactly. And are you in a conventional loan? Can you now drop off your mortgage insurance? How much
Gotcha.
is that going to save you?
Gotcha.
Mhm.
Okay, perfect. Any mistakes you typically think of with either first-time home buyers that you run into? Very experienced buyers, or maybe buyers who purchased a house 10, 20, 30 years ago in a very different kind of economy and market.
Mm-hmm.
So what would be some mistakes that you're seeing or that you think of trying to help people avoid?
First-time home buyers, I see a lot of credit mistakes.
Okay. How's that?
One time, I'll say most of the time, what I see, if they've missed payments on a vehicle or a credit card,
Okay.
and I hear, yeah, but I paid it back up. It's caught back up. They forget the fact that those derogatory marks are on their credit for 7 years, or can be up to. So it doesn't matter if you caught up an account.
Right.
If you made that payment, it hurts on your credit. Just the same. If you didn't pay it at all, right?
Right.
And I see that a lot. They don't understand that. Baby your credit is what I would like to teach any first-time home buyer.
Okay.
Because even if you don't have a lot of income initially, if you have really good credit, that opens up a lot of options for you.
Okay.
And it helps in so many different ways. Better interest rate, right? Better insurance, better car insurance. There's many different things that can help you monthly if you have good credit. And that's where I see that all the time, where people just don't understand what stays on credit.
Yeah.
Take care of it, don't ignore it.
Okay.
And I hear a lot too, medical doesn't count. It's true, it doesn't, but once it hits it doesn't count towards debt to income ratios. Let me be clear on that.
Okay.
So, yeah, it does hit your credit, and that still is a negative on your report. So it could still pull down your credit score. And that's another thing I see a lot and hear from first-time home buyers.
Okay.
Because I think there's some misinformation out there on the great wide Google everything,
No,
you know?
no,
Yeah,
we
I
didn't
know.
trust at all.
Yes, and then
Okay.
for buyers that haven't purchased in a while and they feel experienced, I would just give them a little bit of a heads up. It is very different buying now versus 20 years ago. I think that they add more documents every single year that it's required from the
Right.
borrower. So it's going to be different. And I would just say go with the flow.
Yeah.
It's not going to be as you purchased 20 years ago.
Okay.
And your payment's going to be higher.
Yeah. Has that led to some frustration that you've seen?
Mm-hmm.
Yeah.
Yeah, because they don't understand. Well, they do. They have seen their payment go up, taxes and insurance, but they're still expecting to buy the house that they bought 20 years ago for around maybe a little bit more, but then
Sure.
expecting about the same payment.
Sure.
And when we start talking about payment, it's a little bit of a shock, a sticker shock
Right.
on that, you know.
Yeah.
Mm-hmm.
I mean, I would say the difference, we bought a house 5 years ago
Mm-hmm.
and kind of perusing Zillow and just looking around saying, you've got to be kidding.
And right, I know.
Yeah, so I can't
Mhm.
imagine the lengthened version of that, of saying, when I'm looking at prices in 5, 10 more, 20 more years from now, just thinking, this is a little bit different.
Right.
And be probably being a little bit more emotional about it than I was just kind of showing there.
Going back though to the appreciation, see,
Sure.
it grows. Mm-hmm.
Not guaranteed.
Yeah.
Yeah, as disclosures require. Yeah.
Yes.
So, okay. When you're helping people figure out how fast they should pay off their mortgage,
Mm-hmm.
what are conversations that you have?
This is what I tell every client, no matter what. Get ready to close. 2 tricks I have for them. And many of them have taken both and applied it, and we've been able to already purchase another home with a larger amount down,
Wow.
bigger house, close to the same payment. Because what they did is they paid down their principal very quickly.
Okay.
So general rule of thumb, if you make one additional principal payment towards your loan every year, it's about 4 to 5 years off of your term, right?
Okay.
That's just very general, but at least it gives you a good idea on where to start.
Yeah.
So if you set up a bi-weekly payment right away with your servicer, that the way the weeks fall, that makes one additional payment. So there you go, 5 years off of your 30-year term, you're now down to 25 years.
Okay.
Well, if you take your mortgage payment and you divide that by 12, take that amount and apply it monthly towards your principal. Just be very specific towards your principal, not your interest. And then have that done every single month. Now you've cut off another 5 years off of your mortgage. So a 30-year mortgage now is down to a 20-year. And if you want to even throw, if you get a bonus or a little extra in the month, just throw that towards your principal. You're cutting down the term very, significantly.
Right.
And then how much you're paying over the life of the loan, the finance fees, huge. Of course, you're always going to look at lowering your interest rate if you can, if it makes sense, because that will help too. But those are 2 tricks I tell everybody. I combine both. Just do both of them. You won't even notice it in your monthly budget. And then look at what it's going to do for you. Even if this isn't your forever home,
Right.
the amount you're going to be able to save, and maybe you can use this now for an investment property. Pull out the cash, buy something else. Or like we were talking about, a couple of clients, they went ahead and just sold that house, took the funds and applied it to their next. So now they had 20% down plus on their next home, and they're in a much better situation because they don't have the mortgage insurance. So,
gotcha.
Yep.
Okay.
Good little tricks there.
Awesome.
Sure.
All right. I'm going to cut this too. Don't worry.
No, you're
As I
good. You're
kind of
good.
search
I'm
in
fine.
notes. Do you need a drink of water while I
Sure.
figure out? Okay. We're at 27. Okay. All right. So based on what you've seen, what you're seeing, as you're kind of watching trends with mortgages, with the real estate industry in general, where do you see us over the next few years? What's kind of sticking out now as a trend that you've been seeing, and what do you think is kind of coming down the way?
That's great. So I know for our area, but I think it really does expand into a lot of areas for the mortgage industry is not having enough homes.
Okay.
Yep. The demand is getting higher. And so I think building and construction is going to be something we see a lot more of.
Okay.
Now, of course, prediction rates are supposed to keep trickling down.
Sure.
Do we know that for sure? No. There's no way of knowing absolute. But that's what we see for next year is the downward trend.
Okay.
Yeah.
Anything for the way that you do business? How has that been changing? What changes might you see coming in the way that you kind of navigate the mortgage industry in general as far as that goes? What might be some things that you think are on the way?
I don't think it's necessarily new, but I don't think it's still people aren't just jumping in still right away, is online. And I think most of our consumers are going to go there first to find their lender, to find their realtor, basically interview you before they make that call or have that meeting, which previously it was more of, hey, who do you know? Who do you like? Who do you use? And go more with the local presence. I don't think that's going to be so much moving forward. I think it's going to be more online. The next generation is going to go there to interview, find who they're going to use. I think that's going to be a little bit different for my industry.
Yeah.
Now, marketing, that's the marketing side, but mortgage overall, new. That's a good question. I do think it's going to be harder for first-time home buyers to purchase. I think that's going to be something that we see a little bit more of a struggle with. I probably just messed up your sound.
Yes.
Oh, I just went over.
No, you're good.
Okay. But
Yeah.
first-time home buyers, I do think we're going to see where they struggle a little bit more and probably have more multi-families purchasing together because of that.
Yeah.
Mm-hmm.
Do you think that's attributed mostly just because of a wealth gap there, where first-time home buyers are not coming in with the accumulation or the growth from their original home or from their first few homes, that appreciation that's going to help them to purchase that, or do you think it's more something else?
I think it's a little bit of combination
Okay.
of the economy, prices for so many things are going up. It is a little bit harder if you're starting out to make it, right? Things are just more expensive. But then also, we don't see, and this is even across the board, I would say not even just the younger, but older generations, right? People aren't saving like they used to. And you don't have a savings to fall back on, and you're going to struggle if you need that down payment. Right now, if you don't have the down payment, you are looking more at a grant program. Grant programs typically offer a little bit higher of a rate. So I think it's double. It's the two things together. People aren't saving as much, but it is harder to do so in our economy.
Gotcha.
Mm-hmm.
Okay. Someone's thinking about buying their first home right now. What are you telling them? Anything different than you've already kind of stated?
Mm-mm.
No. Okay.
No. Yeah.
Right.
I would always tell them if they're hesitant, let's just go over a game plan. They don't even have to put in an application if that's where they're uncomfortable. Because keep in mind, this is a conversation that a lot of times you don't even talk with your family about, right? Your finances. It's very personal, like we were talking about.
Yeah.
And so if they want to just have a conversation, let's put together a game plan and see if it's something you want to move forward with. That's what I would tell the first-time home buyers. Just step out there. You don't know until you educate and figure it out.
Yeah. Awesome. Piece of advice you wish that everyone understood. They walk in your door. Every single one of your clients knows this thing, and you never have to go over it. You never have to talk to them about it. What is it?
Oh, man.
You can have a couple. I mean, what might be something that you find yourself going over more often than you wish you were?
That I don't want to ask you for as many documents as we have to.
Sure.
Yeah.
Yeah.
That is just something, I mean, people just don't understand. I don't want to make you go get the 100 different pieces that we need, but it is what you have to have when you're buying a house. Yeah. So that is one thing.
You're
I'm
not
just
inherently that curious about them. Like, hey, right. I want to know everything. I just want to get to know you.
Yes, and this is how I'm going to figure it out.
No. And I do it through a paper trail.
Right.
Yeah.
And I don't sit down and go through, every single little line. No, no.
Sure.
But I'm just here to help you out. Like, this is what we need. We'll work. We're a team on this piece of it. So I'm just going to say, sorry now, you're going to have to get a lot of documents for us. That's one piece of it. I think probably the biggest piece, and that I hear all the time, people don't like the paperwork, and I know. I'm sorry.
So I guess on a kind of a personal note, just kind of like what you would be thinking. Say you were kind of fresher in your career, as you kind of like were navigating that choice between, do I go to the mortgage side, do I continue with the real estate side, and being a realtor. If that decision was in front of you today, you walked in with the same amount of experience, you're walking into this landscape, would you have still chosen to go the mortgage route, or would you have maybe in today's economy like, you know what, I think I am going to go ahead and stay with sales? What would you think?
No, that's a great question. I would stay with mortgage. Yep. I really enjoy this piece of it. I feel like there is a deeper level that I get to go with this journey on with people. And I really love people. I have always enjoyed people. I find them fascinating. Each person their own. They all have their own story. And I love to be a part of that. And this piece of their life, and also, to encourage them. I like all pieces of it, right? All different areas of their life that they're going through. But I do really enjoy when it's, the single mom and nobody else in her family has bought. And there we are at the closing table, and she's just beaming when we first have a conversation and she doesn't think she can do this. And now there we are. I love that kind of stuff. So I would not change a thing. I would stay exactly where I am.
That's awesome. Do you think that I think when you kind of think of realtors in Abilene, there's typically around a conversation around saturation of the market. There are over 800 realtors in Abilene at this. How many of them are you? How many of you are there, mortgage brokers?
Oh, I don't know.
Okay.
Never. So I have my own theory on that.
Okay.
But if I was to, probably 50, 100 different loan officers.
Great. So do you think there's room for that industry to continue growing? Obviously, the traditional bank lender, loan officer, that's not going anywhere. That's a pretty stable industry that's certainly been kind of through a lot of different changes. I'm not worried about them continuing to have market share. Do you think that there is enough area that people going into your field still have the ability to grow?
Oh, yeah.
Yeah.
Because that's what's beautiful too about this industry. I would say probably, when I first started, you really were focused on your area, and that's where you were expected to stay. But now, the way things are growing, like we were just talking about with marketing online, you can market across multiple states. You don't have to be local. And you can still serve your client just as well locally or across multiple states. I have a couple that closed last month. We have Virginia. So you don't have to be in that state. So yes, it doesn't matter if they're coming into this market, they can still grow if they realize they're not limited to just one area. But you were asking about how many loan officers.
Sure.
I just don't know, because I don't focus on that. For me personally, I'm not worried about what the next person is doing or what that person is doing. I'm focused on what I'm doing and what my goals are. And that's, for me, has always pushed me forward. If I get tied up in the comparing and the focusing on who's coming in or all the new people or the market saturated with loan officers, I don't do as well. So I don't pay attention.
Okay.
I just watch my stuff.
So on your business side, what are you working on currently in your business to continue to grow, to continue to kind of move forward in your career? What are you working on right now?
Right now, I have two focuses.
Okay.
Yep. Divorce lending, because I think that is a huge need. There's just not enough information out there.
Okay.
And I see it a lot when clients come through and, for example, one spouse was given debts on the divorce, but the creditor doesn't necessarily look at a divorce decree and say, oh, I'm not going to now go after both people that have signed for this debt. So, credit's wrecked because maybe one decided to stop paying on this account.
Okay.
Or I've also seen where a wife was given the house in a divorce decree, but she can't afford it because she never really looked at, maybe she didn't look at the bills before, or that wasn't something that she did. He took care of them.
Right.
And so now they're both in a bad situation because they're going into foreclosure and credit's wrecked. So I want to step in before any of that happens, and let's put together, again, a game plan to help both of you in a really tough time to make sure you're set up going forward.
Okay.
And so that way, it's not you're trying to go forward and then you get hit again with something really hard. And now, what are you going to do for, a living situation or a home? So I really want to see that change for people. Okay. And then my next focus is construction lending. I think there's that's one thing that we will really need, especially in our area, how much it's growing. And then, like we're talking about, people don't typically have the 20% down. Well, there's other options that you can have with the 0 to 3.5% down. You don't have to have that large down payment and still be able to build a new home.
Right.
Mm-hmm.
So as you're looking into getting into these niche markets,
Mhm.
what are your strategies towards moving towards that? Say someone they're a business person, they're wanting to kind of change up maybe their clientele, they're wanting to maybe get a little bit more niche like you are. How are you thinking about kind of how you're moving purposely into those markets or
Mhm.
into those strategies? What are you doing to appeal to those or to search for that business?
Well, so we'll talk about one-time close construction loans.
Okay.
So we're looking at people that are already in the industry, builders, designers, barn door designers, maybe manufactured home companies, modulars, and then we make those connections and just show them what we can offer. A lot of times people have no idea that this is even out there. This is something they could
Right.
look at or offer their clients, and it opens up options for them, right? And their people that are coming in, they can serve better with a different program or product. Realtors too, same thing, because they're going to have those conversations a lot of times first with a client and know that that's what they're looking for, is wanting to build versus already stick home. So making sure, just information, right? Education. So making sure that the people that are in those industries already know that this is out there and you can offer that. Realtors, same thing for their clients. And then videos, social media. Yep. That's the best way to spread the information.
Yeah, great. On a personal side, what are you focused on right now and changing kind of in your own life and your own kind of just habits, just like on a personal basis? You're obviously very goal oriented. So what's a personal goal you're working towards?
Oh, that's a great question too. Well, see, I will say, you know about, you'll know, we're recent empty nesters, and we had a grandbaby not too long ago, and he's almost a year now. Perfection, just absolute perfection. And when I made a move to open up my own shop, I am very goal oriented. So I was pushing, and I just got to a point where I stepped back and I was, why am I pushing so hard? What am I doing this for? And I'm missing a lot because you in this industry, you work all the time. If you're self-employed too, right? You're working all the time. So I am in a season where I'm reevaluating my goals, because the goals at the end of my life, when I'm looking back, should line up with the goals I have now moving forward. And they need to line up and match. So I want to make sure that that is in alignment. I'm not going to regret not hitting certain work goals, but I'm definitely not going to regret missing out on family and the kiddos and having that time and that peace. So I'm in a season of discovering, what does this new season look like for me? And yeah, how does that align with work goals? Because I've always been very driven. So now if you take a step back a little bit, what does that look like?
Yeah.
So what really is important to me?
That's awesome. All right. Any kind of last minute things you want to talk about? Any ways that people can reach you? How should they try and find you?
You can always find me on social media, Mortgages with Kimberly. YouTube channel, I have information on there, so you can just, education is my big thing. I want people to be educated and feel like they have the information they need to move forward. And then, of course, you can always email and call. I'm sure we can have information on bottom.
Awesome. Well, thanks for doing this.
This was great. I appreciate it.
All right, I'll go ahead and